Hey, what's going on, guys? It's your boy Freddy. Welcome back to the channel. Here on Investing Solutions, I like to discuss different aspects about investing money and making money. I also showcase my personal journey and showcase my accounts and personal strategy for investing that encompasses a lot of passive income strategies, and will take you guys on this journey with me. Check out some of my recent videos about dividend investing in the description down below, where I showcase some nice Canadian dividend stocks that is absolutely perfect for this style. This is an awesome long-term strategy that I'm employing, as I see it as a perfect way of getting some passive income. These dividends come in like clockwork, and it is an amazing way to grow your portfolio, as you can reutilize these dividends and reinvest them back into your portfolio, creating an amazing snowball effect. And for some of my new investors out there, a dividend is basically a sum of money that is distributed by a company through its profits or reserves. So far, I've invested only in Canadian dividend stocks, but I'm really interested in developing a stream of income that can pay me in American dollars. So I wanted to focus today's video on some nice dividend paying ETFs just to get my feet wet. This is a very popular one called SPHD. In today's video, I'm going to show you what this ETF is all about and if I would consider it a buy. SPHD started around $25 per share when it was first created back in 2013. Right now, as of recording this video, it is trading around $42.60, and that is a nice appreciation of over 70% in that time. That is awesome return on your capital, especially for a dividend-oriented ETF. And the reason why we're looking at this ETF is because not only does it have nice appreciation, we also get a dividend payment every single month. This ETF aims at tracking an index. This particular index is a high dividend with low volatility oriented stocks. From a low volatility perspective, it avoids stocks that have those super highs and super lows. It picks relatively steady stocks, so it has very low volatility and it pays you every single month. But is it really worth it? That's what I'm going to try to discuss in this video. If you look on the Nasdaq, we can see that it pays a monthly dividend. Right now, they have announced at 12 cents per share, and it has gone all the way up to 15 cents per share based on past performance. This fund has a dividend yield of 3.85%, which is pretty decent. To put that into perspective, that means if you want to make $1,000 a month in passive dividend income, you need to invest a little over $310,000 into SPHD. Now let's look under the hood of this ETF. The very first thing to pay attention to is the expense ratio. ETFs come with an expense based on how much you buy into that ETF. This particular ETF has an expense ratio of 0.3%. That means for every $10,000 invested into SPHD, the charge would be around $30. For passive income ETFs, you do tend to want to look for lower expense ratios, and this is on the higher end as compared to other ETFs out there, and I'll explain a competitor ETF a little later in the video. Now, the second thing I look at when analyzing ETF is to make sure that they're tracking what they claim to be tracking. You don't want to invest in something which says it's doing something but really isn't. So let's look at what they're tracking. You can see here that it is tracking the S&P 500 low volatility, high dividend index, and you can barely see a difference when you're looking at the darker blue lines, and this is because it is tracking the index very closely. The next thing to look at is its holdings. SPHD will at all times have 50 holdings. These holdings are ranked from the S&P 500 by the companies with the highest dividend yields. But a really important thing to note is that they rebalance semi-annually. So 2 times a year, every January and every July, they do a rebalance. They actually just did a rebalance here as well. The rebalances are done to make sure that they're tracking those top 50 high dividend paying stocks within the ETF. This leads to a very important caution, and that is the turnover rate. So because they have to rebalance, they are going to have some stocks that get the boot and others which are welcomed into their 50 holdings. For example, let's take a look at AT&T. They have recently announced that they're cutting their dividend, so that high percentage dividend that they once had is about to come down, and they had a pretty big position in SPHD's holdings. But because AT&T is dropping their dividend, they will likely either get dropped completely from the list and something new may make an entry into the portfolio, or the percentage that SPHD is holding in them will drop. The second thing that worries me a little bit is that the dividend is going down. You can see here that it was a consistent payout ratio of 15 cents per share through 2019 and even through 2020, but lately it has been dropping now all the way down to 12 cents per share. Granted, some of this could be a result of the pandemic and it is catching up to us now, so that is something to look at. We don't want a lower or declining dividend payout ratio over the long term. SPHD is a low volatility index, and that is really good for people who don't like a lot of risk. What that means is that they're trying to pay us a dividend while at the same time keeping everything calm and stable. So what if I told you that we can keep the volatility on the same side and at the same time get some dividends which will also give us growth as well? All we have to do is replace the P with the C, enter the competitor, ticker symbol SCHD. This one is a Schwab fund. Some people call this the standard for dividend growth investing. The downside with this one is that it pays you dividends every quarter instead of every month. But if that's not an issue for you, then don't set this one aside so fast. There's a lot that this ETF has to offer. I'm going to give a quick comparison of SCHD as compared to SPHD. Firstly, the dividend yield of SCHD as I'm making this video is 2.89% compared to 3.85% of SPHD. At first glance, SPHD is the clear winner. However, if we look at the dividend growth, we see that SCHD has grown its dividend by 13% in the last 5 years as compared to SPHD, which has only grown at 6% in the last 5 years. That is a huge takeaway when talking about passive dividend growth. We want our dividend to continue to grow over time. This index follows the stock performance of high dividend yielding US companies with a record of consistently paying dividends. Here's the difference maker for me. This is the reason I like CHD, and that is that the expense ratio is only 0.06% as compared to SPHD's expense ratio of 0.3%. SCHD is significantly lower. I also want to go over a little bit of the holdings of SCHD. If we look at the top 10 holdings of SCHD, we see very similar companies, and I would say that these companies have an opportunity for future growth and performance. Look at some of these names. We have Coke, Pepsi, there's Pfizer, we have Cisco, Merck, which is also very undervalued these days, and I see future growth potential in many of these companies. And if we compare this to SPHD, well, I don't think I would sleep at night knowing that I'm holding some of these companies in my portfolio. Don't get me wrong, these are some very solid companies, but let me know what you guys think of them in the comments down below. But to look at some of these companies, AT&T, as I mentioned earlier, is cutting their dividend. Philip Morris and Arteria Group, they make cigarettes, which I am very personally against. Then you have things like ExxonMobil and Chevron, some gasoline companies. But with everything going on in the world, I see the world trending a different direction. These are very low volatile and boring stocks. I could be completely wrong. They could grow tremendously, maybe come out with some new innovations, who knows. But as of right now, I see SCHD having more future growth potential and SPHD heading in the opposite direction. Secondly, if we look at market return, SCHD has given a market return of 16.3% in the last 5 years, whereas SPHD only has a market return of 7.38%. In my opinion, SCHD is the clear winner. I would be much more comfortable investing getting in the dividends as well as having that growth potential that SCHD offers. A nice diversified account is what I'm aiming for. I will be looking at the markets for opportunities to get into SCHD. I think it is a clear winner in my opinion. Either way, dividend paying stocks and dividend paying ETFs can be a great hedge against inflation as well as stock market dips and crashes. Check this out. If you compare the S&P 500 versus the S&P 500 with dividends based on the investment of $100,000 in 1990, you can see the greater endpoint with dividends as compared to without dividends. Yes, you are seeing that correctly. That is over $2 million in your portfolio with dividends. With that said, guys, thank you so much for watching this video all the way through to the end. And if you found value in the video, make sure to hit that like button down below, as it really does help the channel to grow. And also consider subscribing for more investing videos like this. I'll catch you guys in the next one.